Well, one should have been worried if one had lots of it. Unfortunately, one didn't. So I'm not worried at all. I think from a purely valuation point of view, I think the argument has been made and beaten to death that valuations are extremely stretched in all the frontline FMCG and many of the private sector banks. And what you are seeing now is actually the fact that finally there is some institutional give up on that. I don't see any rationale for actually holding on to some of these companies, at least in the near term, when you're expecting to see the Indian consumer actually begin to give up a bit. That said, for lack of a better place to hide from an institutional perspective, you may find that a 20% fall actually gets people back into the market, at least in these names. But frankly, at least, ITC may still have some reason because, at the end of the day, it's a seller of drugs. But I don't know about HDFC, why it should trade at the kind of valuation it does.
Anand, one more question. Fundamentally, the street of late was calling for a turn in cycle in the telecom space, but Bharti has seen a fair amount of correction from 350 all the way down to 300. Is it attractive for you at these levels?
Well, the growth in India can't be very much now in terms of number of subscribers. It has to be now more in terms of the value that you can get out of it. As opposed to that, the question is how much you have to pay on license. So if you look at on a ROE basis, incrementally, unless you are able to raise the rates, the level of attraction is not that high, and which is why they have looked at other markets. But at $300, I don't think that you have much to lose in Bharti. I think, it would be still something which will benefit because of the lack of competition that has kept it to come into the industry. I don't